The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good morning, folks. Welcome to the January 30th, the fantastic Friday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there's having a great day, and let's make sure we have an extraordinary one. Now, the easiest way to do that is to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, means we can find the gift in every set of circumstance that life is going to toss at us. Now, today, you and I, we're going to check on the circumstance of these markets. We'll go figure out what those bulls and bears, what those buyers and sellers are communicating to you and I at just past 11 o'clock in the morning. I do want you to know I am absolutely grateful for your presence here. But even more important than that, and that's this. During this next 53 minutes, I'm here to serve you. So feel free to send me an email. Send it off to steve@tfnn.com. Inside that subject heading, please put radio show question. And of course, if you're inside our Tiger's Den, and you should be, then any and every ping will do. So let's go ahead and get this show started on Fabulous Friday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. So quite a sea of red out there. All the U.S. indices trading the downside. About 300 points for the Dow. S&P 25, 159 for the NASDAQ, 36 for the Russell, 175 for the transports, 120 for the semis, 110 for the composite. Gold's off $293, 5.5% there. Silver, $17, 15%. Light sweet crude is up 32 pennies. Natural gas up 50 cents. That's a 7% move there. 30-year Treasury down 10 ticks. Leaders to the upside in the clubhouse are Tech Create Group, $138, 160%. SanDisk up $71, 13%. Credit Acceptance Corp, $34, 7%. Lumen Thumb is up $27. That's a 7% move. And Tesla's up $20, about 5%. To the downside, getting the snot kicked out of it, KLA Corp, down $201, 12%. Bank of Montreal, 25%, 117-point move. Wow. Cavco Industries, $108, 17%. IES Holdings, $83, 70. We got plenty to look at if you want to look at those. Of course, I want to look at what you want to look at. Let's begin our day by taking a look at, so the advanced decline. The New York Stock Exchange, the advanced decline oscillator is now below zero. Let's go check in on it. We can see it is now below zero threshold level, likely to close below that today. It needs two consecutive closes below that to tell us that sellers are the ones that are in control. I would say that if the spot VIX index is able to close the day above its 50-day exponential moving average, we closed above it yesterday. We're trading above it now. It being 1649, we're trading at 1707. If that closes above 1649 today, that combined with what we see inside the New York Stock Exchange advanced decline oscillator, sellers will have the edge. What does that mean? Well, what that should mean is that we would see price try to push down and test support, as it already has done today. If you take a look at what transpired overnight, the ES Mini made a move all the way down to the 69.26 level. That is the bottom of its daily profile. Support is held. We are in a sideways consolidation with inside its profile. In the case of the NQ, which has an A to B equals CD pattern on the upside, it's attempting to form a new profile. It has resistance at 26.084. Support at 25,422. Nothing is broken here. This profile has formed above the prior profile. That is a warning signal. Warning for higher price. The warning is that this move is, as Basil just said, it's just rotational that we have that's going on in the market. Nothing is broken. Take a look at the Dow Equity Future contract. I know Basil said you guys started a short position there. Here's where I would give you caution, and that's at the number of 48,702. If we take a look at the Dow Equity Future contract, which does have an A to B equals CD pattern, the upside gets us above 51,000. It also does have, though, no, I'm not going to go there. It doesn't have that, not that I see. But what price was doing was trading above the top of its daily bearish structured profile for well more than 2 consecutive sessions. We can see that, and this is where the profiles are so helpful to us, so helpful. When you have a bear structured profile and you close above it, a move to the downside or a counter trend move to the downside is going to find support. Find support where? Inside that sell zone, 48,702 to 48,894. The actual low of the Dow equity future contract this morning, 48,696 versus 48,702. You don't think those profiles are strong? Super strong. So if you're short, what you are looking for, what you are absolutely looking for, is a close below 48,702. If we get that, that says, okay, this is more than a counter trend move. Now, it may just be a move back to test support at 48,223, or it may be something other than that. But right now, the key level we're watching inside the Dow equity future contract is going to be that 48,702 level. Inside the Russell 2000, which does not have any kind of a topping pattern, it does have an A to B equals CD pattern on the upside. It is also trading with inside its profile, and it has support at 2613. Now, if support fails on any of these, the next downside target, to the extent that you're taking a snapshot of Stevie's charts, the next downside target would become those TD9 count breakout levels. But we're ways away from that. That is not even in play at this moment in time, although it would be the Russell that could give you that first inclination. So 2613, 30, the key number for the Russell 2000, 48,702 is the key number for the Dow. What else do we want to take a look at here to assist us? Let's take a look at, don't want to go there. I know what I want to do. I'm going to pull up the equal-weighted ETFs out here. So I don't have, it's going to take a moment to pull those up, but I think it's going to be worthwhile for us to see what's going on in the equal-weighted complex out here. So we'll take a look at both the daily and the weekly. Of course, we've got daily. Of course, the daily is going to end today. Of course, we got a week ending. We've got a month ending. So if we take a look at the QQEW, that's what's populated on our screen right now. We've got both the daily and the weekly out there. Those are the equal-weighted ETFs for the NASDAQ 100. For the S&P 500, it's RSP. And for the Dow, it's the one that makes the most sense, EDOW, equal-weighted for the Dow out there. When you look at the weekly time frame for the Qs, what you see out here is what? Just simply a sideways consolidation after it formed a TD9 count top. Nothing broken here. Price trading with inside its profile. Profile has support at the price point, which is at the price point of 139.97. So if we were to close below that, says careful. On a daily time frame, just a consolidation with inside his profile, nothing broken there. I'm sorry, I was looking at the RSP. And the QQEW, nothing broken there also. Just price trading with inside his profile. It's got a swing point that is trading into, no, it's not, has not gotten all the way down there. The swing point has volume. As an example, 46,000 shares. Yesterday, we pulled back with 64,000 shares. So far today, in less than 2 hours straight, wow. Only 4,000 shares? Wow. Really, only 4,000 shares in 2 hours of trading? Super light volume in the QQEW. It says be careful. It says be careful. Now, the RSP is a slightly different story out here. And we'll take a look at that story when we come back from this break.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the Opening Call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening Call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years, with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Welcome back, folks. I know you don't want to hear me whining about the cold weather we have down here in Florida. The high of the day for the weekend is coming in at about 3 hours. At about 3 o'clock, between 2 and 3, we're supposed to get up to 69 degrees, and then that's it. And then from there, we start heading south. Not going to be, if there's any golf this weekend, it might have to be an indoor simulator, which wouldn't be too bad. I can really test out the carry distances on my clubs. In any event, we're back to the markets out here. So let's start with the QQEW. The QQEW, again, for its daily and its weekly time frame, both have TD9 count tops. Now, in the case of QQEW, that TD9 count top that I'm referring to is one from back on October the 30th out there, October 28th is when that formed a TD9 count top. The weekly formed its TD9 count top. Let me get my cursor. Formed its TD9 count top the week of October the 31st. So those remain in place out there. But what we have seen since they formed is nothing but a sideways consolidation. And I wouldn't expect anything to change out there, but they have those tops that are in place. In the case of the RSP, it has a daily TD9 count top. In order to negate that, it needs to see a close above the high from January 15th, and that would be 200.11. In the case of the weekly time frame, it completes a TD9 count top this week, and that says in order to negate that top, it needs to close above 200.78. Now, in the case of the daily time frame, it's had a TD9 count top for nearly 2 weeks. It has just simply traded and consolidated sideways. It makes that 195.95 a key level. To the downside on the weekly time frame, it's really the oscillator and change line, 196.86 at this moment in time. Price needs to close below the weekly oscillator and change line, below the bottom of the daily profile, to suggest that we head lower, and to really put some pressure inside the S&P 500. In the case of the Dow does not have any kind of topping pattern for its daily time frame. You can see the A to B equals CD top that is present. It negated its wave number 7 top out there. If we take a look at the weekly time frame, though, it's going to complete, like the RSP, it'll complete a TD9 count top this week. So the weekly could take force here. However, price is traded above the top of its profile. So no damage done. The first level of support on a weekly basis is the top of that profile, 41.87, followed by 41.57, followed by finally 41.12, and then the breakout area at 40.21. That's what's going on with the equal weighted ETFs, so they do absolutely suggest caution, especially when we've got that spot fixed index above the 50-day exponential moving average and the New York Stock Exchange Advanced Decline Oscillator below its zero threshold level. Okay, let's get into some of the requests that have come in. The first one really coming from John. C wants to take a gold and silver, and I suppose everybody else does too. So for that, we're going to go to a different set of charts out here, at least to start off our view. And that's going to be the set of charts that takes a look at the daily, the weekly, the monthly, and the yearly. So when we take a look at silver, we'll start with the yearly chart, which is going to be on the left-hand side. When it populates, you will see that last year, price negated a TD9 count top. So there's no daily topping pattern that we have. If you look at the bottom of the screen, you will see that we've had 2 consecutive years in a row to the upside. This would be year number 3. No danger there. We look at the silver monthly time frame chart. Today, it will negate a TD9 count top. So longer term, this is telling us that the move to the upside in silver is not over. But how long is the move to the downside? Is it 1 to 4 days? Is it 1 to 4 weeks? Or is it 1 to 4 months out there? And that's a question I don't have the answer to, but how we will make that determination is taking a look at whether or not we have topping patterns. Well, it turns out on the weekly time frame for silver, we are likely, not guaranteed just yet, but we're likely to get a dark cloud cover candle. Turns out that dark cloud cover candle would generate a Rhodes momentum indicator top. If that's the case, which it is the case at 1122, price should then pull back to its oscillator and change line. It's printed at 79.84. As price moves lower, so too will that line. But right now, the target to the downside for silver, we're at $95, is another 15 or so to the downside around the $79 area. That's the weekly chart. Now to the monthly chart. Today we'll complete a monthly TD9 count top. This is why yesterday I was trying to be, Paul Revere, riding through the streets of TFNN saying, be careful, look at these charts. We looked at gold, silver, the GDX, and so there's no surprise to any of us to see what we see today, especially when you understand the average true range of gold and silver during the last 10 days, we're not even 160%. We're not even an expansion level of the average true range. But listen, on the monthly time frame chart, what this is now telling us is that price should pull back to its buy zone. And the buy zone from a profile standpoint for the March contract is between 89.28 and 92.44. Below 89.28, we're looking at 86.57 out there. So that's where we're taking a look. I'm sorry, did I say monthly? Gosh almighty, that's the daily time frame. Rhodes, get your act together. I think you knew what I was talking about. The daily time frame is one that's got that completed TD9 count top, with it pulling back to the 89.28, 92.44 type level, 86.57 being its breakout area. So that's what's going on when we take a look at silver, John. Now let's go take a look at the gold contract. Now this is going to take I got to use a continuous contract here. Give me a moment to get that up. Got to do that on the monthly time frame. This is so that I can grab enough data so that the signals that we're looking at are actually accurate on my system here. And then for the weekly and the daily time frame, we'll actually be able to take a look at the April contract. So I have a good view as to what's going on with regard to gold. As soon as we get these charts here populated. There we go. Let's start with the yearly time frame. The yearly time frame, we are in what? We are in the year following, we are in the bar following bar number 9, right? So we're likely to have a TD9 count top when? This year. If we take a look at the last time we had a TD9 count top on a yearly basis for gold, it was 2011. Okay. So no top just yet, sometime during the year. Let's take a look at the monthly time frame. The monthly time frame is going to complete a TD9 count top today. That suggests that price could pull back towards the 4,069 level and even below that. We've been higher for 6 consecutive months. This could be telling us about a 2 to 4 month pullback. And gold will be the driver. Silver may outperform but gold will be the driver. And we take a look at gold on a weekly basis, gold is going to complete a TD9 count top today. It may also confirm a Rhodes momentum indicator top today. Price should pull back to its first level of support, and that's at 47.15 or so. It's weekly oscillator and change line. Now to the daily time frame. The daily time frame at this moment in time is likely not to form a TD9 count top. In order to do that, we need to see a bit of a rally. Price must close above the close of bar number 5. Bar number 5's close is 51.2230. If we get a close below that, there's no TD9 count top. What there is a new profile that is attempting to form. Again, this profile has shifted even since we've been on the air. Now we've got resistance up at 55.4350 and support at 48.7670. The center down at the 52.10 level. The oscillator and change line is a thing to be watching today. It closed below it. That's at 50.92. If we get a close below that for the daily time frame, price has lost momentum, and very likely we will at least see a move to 48.76 if in fact and indeed that is the profile that is in place out there. So that's what's going on with gold and silver, John. I hope that answered your questions. If there's additional ones, type them in the Tiger's Den and I'll make sure that I'll answer those as well. Steve Rhodes with TFNN. We'll be right back.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This portion of the Trader's Edge is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risks, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foresight Fund Services, LLC.
Welcome back, folks. So to finish off gold here, I wanted to just move to the intraday charts. So you can see that as we are moving down this morning, at about 5 and 6, we got some nice bottom signals. If you take a look at the 60-minute time frame chart, you'll see a TD9 count pattern that confirmed at 5 a.m. The 30-minute, it was at 5 a.m. The 10-minute chart confirmed one at 9 o'clock this morning. It confirmed another TD9 count bottom at 5:10. We had A to B equals C to buy the D point bottom pattern on the 2-hour chart. That went ahead and confirmed at 6 o'clock this morning. So here's what we know. We know where the buyers are. We know it is clear as day. So this is also helpful to you in understanding what's going to happen with regard to GDX, with regard to gold, and with regard to silver. It will take its P's and Q's from Goldilocks. So therefore, if we see a close below the low of the day, the low of the day is 49.6270. We're going to see lower price. That lower price would likely be 48.7670. That's what the current profile is showing for the daily time frame. And if we get below that, you're looking at 43.8780 as a price target. And the reason I say that is because we are now below breakout levels for the 5-hour, 4-hour, 2-hour time frame charts out there. So that would become the next price target on the. So that takes care of gold out there. I don't think I need to go through silver at this stage here. It'll take its P's and Q's from gold. So you've got the numbers to be paying attention to, and I hope that assists everybody out there. Let's take a look at IBRX. This is for Dan inside the Tiger's Den. I got IBRX. It's trading out at $5.97. It's had one heck of a month. It is likely going to close the month above the top of its bear structure profile, Dan. That's at 581. We're at 597. If you do that, that says we had higher. We're also going to close inside a monthly swing point from back month of April of 2024. 233 million shares traded that month. This month, we're up with 1 billion shares. When you close inside a swing point with volume, you go test the high of that swing point. That says that IBRX over time wants to go target $10.53, almost a double from where we're at. The weekly time frame chart, also very bullish, no topping patterns, trade above everything, TD9 count breakdown levels, oscillator and change lines, profiles, you name it. It wants to move higher. It's the daily time frame chart that you're contending with right now. And I do not have a topping pattern. I would really struggle to draw some kind of A to B equals CD pattern in there. So we're not going to do that. You don't want to have to force your patterns out there. The patterns come to you. Don't go to the patterns. Now we take a look at IBRX on a daily time frame. We're trading right now. The question is, does it close above its oscillator and change line or not? It is at 594. We're trading at 597. Dan, I would say if we close below 597, odds favor what price is doing is it's making its way down to profile support at 488, which would really be the next buy area out there. So what you're really looking for today, what you'd love to see today, is a close above 581. If it closes below the 5, what was that? Oscillator change line about 595, I think. Let's say 5. Did I even say 594? So 594. If you close below that, odds favor you're going to move back to the 488 level. But weekly and monthly are looking beautiful. I hope that gave the information that you were looking for. If it didn't, let me know, and I'll be happy to get back to that. GLX is a ticker symbol that we're going to look at next. This is for S&P inside the Tiger's Den. GLX, she is trading out at, good question. I think because I put those yearly charts on my screen out there, it's just sucking up resources. So sorry about that. Now, GLX, maybe that's not a symbol. Maybe it was GLXY. That's why I'd written back to you because I couldn't tell. Is it? Oh, let's see. No, I want GLX. Let's see if it's GLXY. Here we are. Here's S&P right now. Let me see. He's going to correct me. GLXY. Okay. So we got GLXY. It's trading out right now at 28.05. Thank you for that. I appreciate that, S&P. Trade out at 28.05. It's trading below the bottom of its daily profile and its oscillator and change line. And it looks like it's forming a small A to B equals CD pattern to the downside. The B point has volume of 5.7 million shares being passed so far with about 2 million shares today. So it's being passed with volume. So it looks like what this needs. It needs a bullish reversal candle to confirm a buy the D point pattern. Short of that, price will continue to move lower. Move lower to where, though, is the question, and we're going to try to figure that one out. So on a daily time frame, the move lower gets you all the way back to your lows of December out there in the 22 range. The weekly time frame says, geez, that's a possibility. Why does the weekly time frame say that's a possibility? Because price is pulling back right now on a weekly basis, and if we get it closed below 27.98, we're at 28.01. If we get it closed below 27.98, we'll be below profile support. When you add that to what we see on the daily time frame, that says lower price out there. On a monthly basis, not enough data here, really, S&P, for us to come up with a real insightful message, but I'll try. As I take a look at the last 3 months, I see just by a smidgen, but smidgens count, I see lower highs out there. So that's a bullish signal from the monthly time frame chart. The weekly just depends on its close today. And the daily, what you're waiting for there, it's day number 3 to the downside, is some type of bullish reversal candle to confirm a Gartley buy pattern. So I hope that helps you with GLXY, and thanks so much for your request. I see we've got a couple more inside the Tigers Den. Thank you, Steve-O. You'd like to take a look at Marvell. MRVL is a ticker symbol. See what that is doing. I'm going to just check the email system, see if anybody's written in. I've got, here we go. Got Brent is looking for something. So we take a look at Marvell. I see Marvell with a daily TD9 count bottom. It's being tested. It's still in place out here. That TD9 count bottom would be negated with a close below 79.02. But even if it does that, you still have support at $78. It's a close below $78 that would start to have you concerned. Now, I see an A to B equals CD pattern to the downside. Was it confirmed with volume? The swing point is December 17th. The volume there was 16 million shares. 16 million shares passed with 16.5 million shares. So you've got an A to B equals CD pattern after forming a TD9 count top way back in the early part of December. Now we take a look at this A to B equals CD pattern for Marvell. That says this may want to take a ride on the reading, and that reading says $72.13 out there. Now, we're not going to get down there until we negate the TD9 count bottom pattern. And really, we're not going to get down there until we, even though we got a confirmation, until we close below $78. But if we do close below $78, 72 is on the way. The weekly chart's not helping you out. The oscillator and change line continued to act as resistance, support 71.41. Well, shoot, that gets us down to our A to B equals CD. On the monthly time frame, price just simply trading with inside his profile, but below the oscillator and change line. Lost momentum. I think what Marvell wants to do is head lower, but let's find out. Okay, and to find out, we just have to sit here and be patient. I don't see any other trade. I hope that helped you out. You also want to take a look at CoreWave, I believe it is, CRWV. So we'll take a look at that. But first, we'll take a look at what Brent has an interest in, which is BYND. So come back to this break. We'll look at those two symbols.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstadt's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstaddt releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
In the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We're taking a look at BYND. I believe that is Beyond Meat, beyond Stevie's comprehension of eating it. But let's go take a look at the stock charts and what they're looking at and what we can find out here to assist Brent, who does not have a position, just looking at the charts here. Now, in the weekly time frame chart, monthly chart, really no assistance to us at this moment in time. What it needs is a bullish reversal candle to confirm a bottom. The weekly time frame chart still has an A to B equals CD pattern to the downside that's got a price objective of 46 cents. So far, the low for the month has been about 70. I think we've hit it today, 76 cents out here. So that's not helping, and we're trading below profile support. However, let's take a look at the daily time frame chart. And the daily time frame chart loves the TD9 counts. Why? It's formed a nice TD9 count bottom back on October 16th. That led to one heck of a 3-day rally. Quite a rally, quite frankly. Next time we get a TD9 count bottom, it is on November 17th. It rallies just for 1 day into the oscillator and change line. We then get another TD9 count bottom on November 21st. It rallies into its TD9 count breakdown resistance level at $1.34. So you had 1, 2, 3 is the 4th time the charm out here. Brent, I don't know the answer to that question, but today is going to become bar number 9 of a TD9 count. You have resistance at 81 cents, resistance at 84 and 88. The 88 cent level is the number where a counter trend rally would come to an end. So if you do take a long position and price closes above that, stay with that position. It'll get you up to the $1 level out there. And if you can close above that, maybe get all the way back to that TD9 count breakdown level. That's where price got back to the last time that we had a TD9 count bottom, and that is at $1.34 out there. So Brent, thanks for your request out there. Hope that gave the information you were looking for Beyond Meat out there. Now let's go take a look at CRWF. This for Duncan Steve inside the Tiger's Den. CRWF. I think I wrote down the wrong V. Yeah, okay, V. I wrote something down. Anyway, we got the right CRWV out here. So right now, let's see. Was that a sell the D point up, Steve-O? Is there an A to B equals CD pattern? There most certainly is. There's a couple of them, but that certainly is a sell the D point top with this dark cloud cover candle 3 days ago. It has led to a retracement back to its oscillator and change line, trading with inside its profile. It's possible that it's bottom. It's trading inside a bullish structured profile. The buy zone is between 89.81 and 95.28. Price also got back to the 95.28 level. So far, 96.15 is holding. That's the daily oscillator and change line. If price closes below that, Steve-O, we're likely to see a move to 89.81. But the move to the downside, 3-day move to the downside, may be coming to an end, and it may be getting ready to rally. The weekly time frame chart is trading below profile support at 111.92. You know, that's a significant resistance level for you, but it's also trading above its green oscillator and change line, and that becomes your zone. So maybe from an intraday standpoint, that's something for you to consider or look at. And on a monthly time frame, we're going to close above last month's high. That's a bullish signal. After a 3-month move to the downside, no reason for core wave not to continue to move higher. It's just the daily that you want to make sure that you keep an eye on out there. So hope that helps you out, Steve-O. There's another request, which is to take a look at Decker's Outdoor, and it is for Sitmark. Let's go take a look at it anyways. That is DECK. That's been quite a while since we've taken a look at Decker's Outdoor. Let's go see what this thing is doing. Decker's Outdoor trading out, as we all having a heck of a day, trading out at 115.45. Nice gap to the upside. No topping pattern on a daily time frame that I see. It would need a bearish reversal candle to confirm a Rhodes momentum indicator top. Now, the rally's likely come to an end, at least at this moment in time. Why is that, Steve-O? Because we had a Rhodes momentum indicator bottom pattern on the weekly time frame chart, and price just ran into its TD9 count breakdown resistance level at 115.45. We're trading at 115.50. Okay, so you're running right into resistance out there. Maybe now, if you can close above it, this is the weekly chart we're looking at. So if you can close above it, that is again 115.45. Then what is the likely outcome is that price will go ahead and make a move to 122.68-ish. That is the monthly oscillator and change line. Another thing to consider is that the B point of an A to B equals CD has volume of 14 million shares. That was the January 9th week. This week we are up with 19 million shares. So you're getting a confirmed A to B equals CD pattern to the upside. Let's go ahead and draw that in. You still have to deal with resistance. Trading these markets, what price behavior is doing, it's really all about support and resistance out here. And can you break through either of them? If are you going to the downside? You going to the upside? Can you break through resistance? In this case here, you want Decker's Outdoor to close above 115.45. If it doesn't mean the move is over. No, but it's telling you that you got a strong resistance level. Because before we looked at Stevie's charts, you probably didn't know that 115.45 was going to be such a resistance level. And that is the benefit of the TD9 count system. It is the simplest system that I could teach anyone. Well, the simplest is just take a look at the bars themselves. Are we making higher lows? Are we making higher highs? Making lower lows? That's the easy system. But the TD9 count, that's going to provide you with data that you can use to manage your trade, or at least know what in the Sam heck is going on. I'm going to open up this daily time frame chart just a tad, see what else we're going against on the left-hand side of the chart. If it is able to close above the weekly TD9 count breakdown resistance area at 115.45, then it will, as it's got that A to B equals CD pattern, but it also has the next TD9 count breakdown resistance level at 119.26. That is coming from the daily time frame. So keep note of that as well out there, and thanks for that request. I don't see any other requests inside the Tiger's Den. If I overlook something, please type that back in. I am looking at the email. Don't see anything there. Let's go take a look at currencies. We've had some pretty big moves today that are sending the U.S. dollar index higher out there, both the yen, the euro, and the pound doing the same thing. So now when we take a look at the yen, you can see that move lower, wants to pull back to test its oscillator and change line. That's at the 118.5 level out there. As that moves lower, the U.S. dollar index moves higher. We've got to sell the D point top inside the euro out there. So if we get a close below 118, we're going to see a move probably to the 117.8 level. The TD knockout breakdown resistance that didn't hold. Will old resistance that didn't hold become new support? I don't know the answer to that question. If you look at the U.S. dollar, Japanese yen, I've got no bottom pattern out there, but we do have a series of what? Higher lows. And it's having a heck of a move. This wants to rally towards the oscillator and change line. As this rallies, it's actually weakening against the U.S. dollar index. If you look at the Great British Pound has got an A to B equals CD pattern on the upside. You're going to get a bearish engulfing candle today. That's got to sell the D point top. The Great British Pound should pull back to $1.36, 1367. That's its oscillator and change line. As that moves lower, the dollar's getting stronger. So this is telling us more likely than not, there's more strength to come inside the dollar. The question is, do these oscillator and change line levels hold as support for the pound and the euro, or resistance for the yen? And if the answer to that is no, the U.S. dollar index is going to get stronger. We also talked about the U.S. dollar index yesterday. We took a look at the yearly pattern. If we didn't do it yesterday, we've done it a number of times out there. 2026 should be a higher close above the close of last year for the U.S. dollar index. By the way, Bitcoin is going to form a TD9 count bottom pattern today. It'll complete that pattern on Sunday. We're taking a look at Bitcoin futures here. Steve Rhodes with TFNN. We'll be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Welcome back, folks. We're taking a look at the gold miners ETF out here, the GDX. So we take a look at the daily time frame. Remember, this was one of the major caution signals as we took a look at this yesterday. And that was that we were confirming a TD9 count top that was completing today. The weekly had already completed a TD9 count top last week, and the monthly has a TD9 count top that may be negated at day's end. And it just needs a close above 91.67. So the interpretation would be if we close above 91.67, the longer term move in the GDX is not over. That doesn't mean it won't pull back for 1 to 4 months. It just means that the longer term move is not over. On the daily and the weekly time frame, let's take a look at the daily first. Really, both of them kind of side by side. On the weekly time frame, which is going to generate, which already had a TD9 count top, completed that pattern last week. Now it's got a Rhodes momentum indicator top. Price is pulling back to its oscillator and change line. So 95.51-ish is a level of support. 94.44 is the TD9 count breakout level for the daily time frame. Watch those two levels. If you get below the oscillator and change line on a weekly time frame, you're going to get to 94.44. If you close below 94.44 out there, boy, that creates 89.75, 83.98, 74.37, and 72.45, and those are real numbers. Now they don't. We got it. This is like you are the quarterback. You are Brady. You know what the play is, okay? But you're going to just simply do the countdown, the checkoff here, okay? For each of the plays. Right now, that's all we're doing. And that checkoff says, the first checkoff comes at 95.50. That's coming from that weekly time frame with regard to the GDX out there. Real quickly, I'll put the multi-time frame set of charts for silver up on our screen. I had a request for that. So let me get those up here so that you can capture those on your screen. I want you to have a fabulous Friday. I want you to have a wonderful weekend. I want to see you back here on Marvelous Monday. I'm looking for silver to see if there's any kind of bottom signals out here. Well, not really. It looks like silver's going to negate a TD9 count bottom on the 60-minute time frame chart. Folks, just simply have a wonderful weekend, and I'll see you on Monday. Take care.